Why all millionaires follow the debt investing rule. We've always heard that debt's a bad thing. More debt means being poorer. But what if we told you that's not true, and you can use the debt to become a millionaire in your own time? Sounds shocking? Well, that's what we're going to talk about today. The debt investing rule. What is it? Well, recently, Elon Musk's net worth surpassed $300 billion. That represents more wealth than the combined GDP of nations like Finland, Greece, and Portugal. He would require 25,000 years to spend all of that money if he spent $1 million per month. Even if he spent $1 million per day, it would take him almost 822 years to spend $300 billion. Consider what your life would be like if you had $1 million to spend every day. Elon Musk is currently 51. Let's assume he has another 50 years to live. If he wanted to spend all of that money within his lifetime, he would have to spend $6 billion every year, or $16.5 million every single day for the rest of his life. But there is a twist. This wealth has only one drawback. It's not real at all. There's nothing but paper wealth here. He might wind up losing all of his fortunes if he attempted to convert it into actual money. When a slightly profitable company's CEO sells off his shares, it scares away potential investors, and an excess of Tesla shares may quickly drive down the stock price. He'd also be subject to a 20% capital gains tax, which would reduce his net worth even further. He's therefore not quite as wealthy as he might seem to be on the Forbes list, but in the end, it doesn't really matter. He's the richest guy in the world, and he can easily borrow money by pledging some of his Tesla shares as security. Elon Musk is capable of approaching a bank and asking for a $100 million loan. Tesla shares can be sold by the bank if Musk's unable to make payment on time. The bank would easily lend him as much money as he needs at a rate of 1 or 2% because Tesla is doing so well that they don't want to take any chances. Tax-free wealth. Since debt is not taxable, Elon Musk or any other billionaire can access their wealth that only exists on paper without paying taxes. He spent $17 million on his first Bel Air mansion in 2012. Tesla stock cost $6 at the time. He could have sold shares of Tesla worth $17 million to pay for that property, but instead, he secured a mortgage by using his shares as collateral. Since then, Tesla's stock price has increased by nearly 200 times, while he has only had to make 2% in mortgage interest payments. If he had sold his shares, he would have had to pay capital gains tax of 20% and lost the chance to see his shares increase by 17,000%. Let's see why millionaires don't fret over a debt so much. Spend $1 million on artwork. To generate interest, pay certain journalists. Pay some professionals to write about what a fantastic work of art it is and why it's worth $100 million. You can borrow up to $1 million in cash at an interest rate of 1 or 2% by going to a bank and pledging your work of art as security. You can now purchase a mansion or a yacht or organize a sizable celebration. When your company makes some income at the end of the year without selling any shares or paying millions in taxes, just be sure to pay the least amount due. If you believe that's where it goes, then you don't know how far it goes for billionaires. One example is the British economy. The 1990s are in, the British economy is struggling. The economy's in chaos, unemployment is on the rise, and inflation is out of control. To survive, Britain had to weaken its currency. However, the ERM, or European Exchange Rate Mechanism, set all European currencies against one another to avoid currency fluctuations and facilitate commerce across Europe. Demand for the British pound was decreasing as Britain entered a crisis. Thus, to maintain equality between the pound and other European countries, the Bank of England had to purchase pounds worth billions of dollars. While it was awful news for Britons, George Soros saw an enormous opportunity. By examining the data, he understood that the Bank of England would eventually have to weaken the pound, even if doing so meant quitting the ERM. Soros was standing next to a gold mine. He borrowed billions of pounds from different hedge funds at extremely low interest rates, which he afterwards sold on the forex market for German marks. It was an easy concept. When the value of the British pound declines, Soros will return those pounds after purchasing them at a lower price and keep the difference. In an interview on September 16th, the head of the Bundesbank suggested that it would be feasible for some currencies to experience pressure. Soros started calling all the major banks, or any bank, that night as Europe slept to borrow as many pounds as possible. By morning, Soros had borrowed and sold pounds valued at more than $10 billion. Absolutely nothing was in order at the Bank of England. The value of the British pound decreased. The Bank of England increased interest rates to 15% while buying $27 billion worth of pounds. However, it was already too late because Soros's action caused the entire market to start selling its pounds. Soros made over $1 billion when England quit the ERM and devalued the pound before the day was out. He broke the Bank of England, borrowed billions of pounds, and made $1 billion without spending a single penny of his own money. After that, can you honestly say that debt is bad? How can you use debt? Well, the relative merits of a specific debt rely on several variables. There are two things: the interest rate and the time frame for repaying the loan. The purpose for which you are borrowing the money is further consideration. Your debt tolerance is another crucial factor to take into account. Generally speaking, good debt is credit that helps in the development of long-term prosperity. On the other hand, bad debt can ruin your credit and drain your resources. Two elements make a difference: risk and expense. Leveraged investments may be an appropriate debt strategy for you, depending on your situation and risk tolerance. Consider investing $100 with 10% projected return. You would make $10 if you invested your own money. However, if the interest rate on the loan is less than 10%, you could make more money if you invested half of your money and borrowed the other half. According to Mook, you leveraged your return in this instance. Using a loan to diversify your investment portfolio is another potentially successful debt approach, particularly for certain wealthy people who have concentrated stock positions in a single business. To create a more well-rounded long-term investment strategy, they can borrow money against that focused position and use it to purchase stocks in other businesses. If you borrow money against a concentrated stock holding to diversify your portfolio, you may be able to postpone paying the capital gains tax that you would have to pay if you sold the concentrated stock. Debt is a powerful tool. Although debt is a strong tool, not everyone can use it. It could be your worst enemy or your closest buddy, even if you have a bank account with hundreds of millions of dollars in it. Not a single smart business person will invest that cash in expanding the company. Instead, inform the banks that you or your business genuinely has the funds, and they will then borrow a comparable sum to fund your activities. Your level of comfort with a particular debt load depends on how much risk you can take. It's critical to comprehend the drawbacks of taking on debt so you can assess your comfort level with the risk. You can argue that since you owe the bank so much money, you didn't make any money when it comes time to file your taxes at the end of the year. All of a sudden, you don't pay the 21% corporate tax anymore. Additionally, if you need money to support your extravagant lifestyle, use corporate funds to pay for your private plane, pricey restaurants, and luxurious hotels so you can deduct them from your income at the end of the year. In the U.S., as well as everywhere else in the world, practically every business operates in this manner. This ends the video for today. We hope it helped you understand the debt system. Like, share, and subscribe to the channel to learn more. See you in the next video.